Welcome to SB News Podcast. We look at the fundamental aspect of the economy and its impact on the Forex future and the stock market. Any opinions expressed here are for information purposes and must not be taken as investment advice. The Bank of England's Monetary Policy Committee increased the bank rate by 0.25 percentage points to 5.25% during its meeting that ended on August 2, 2023, by a vote of 6-3. As it fights to bring raging UK inflation back down to its 2% target, the Bank of England raised interest rates for the 14th consecutive time, this time by a quarter of a point to 5.25%, a new 15-year high. One member opted to keep the bank rate at 5%, while two members preferred to raise it by 0.5 percentage points to 5.5%. The BOE wants to get inflation to its target level of 2%, and if necessary, policymakers plan to raise the rate even further. The current monetary policy stance is constrictive in light of the large increase in bank rates since the start of this tightening cycle. The tightness of labor market conditions, the pattern of wage rise, and the inflation of services prices are all indicators of sustained inflationary pressures and resilience in the economy as a whole that the monetary policy community will continue to closely watch. More monetary policy tightening would be necessary if there were signs of longer-lasting pressures. In accordance with its mandate, the MPC will make sure that the bank rate is sufficiently restrictive for a long enough period of time to sustainably bring inflation back to the 2% target in the medium run. Recent data results have been inconsistent. However, some significant indications, most notably wage growth, point to the possibility that some of the concerns associated with more persistent inflationary pressures have started to take shape. Additionally, monetary policy was working to maintain longer-term inflation expectations at the 2% target. Since the MPC's last meeting, the majority of indices of consumer and business inflation expectations have tended to fall, although medium-term inflation compensation measures in the financial markets have risen slightly and have stayed above their long-term averages. US and Canadian unemployment rates were released on Friday. In contrast to Canada, where unemployment increased by 0.1% since the last publication, unemployment in the United States decreased during that time. Since the COVID outbreak, there has been a third straight increase in unemployment in Canada. The construction sector experienced the largest decrease in employment in July even though the overall number of new job vacancies remained stable. Due to rising borrowing costs, investors may be acting more cautiously with their investments, which may be a sign of a decreasing capital flow. However, the rise in interest rates in the U.S. has not been able to slow down employment. Federal Reserve Governor Michelle Bowman stated on Saturday that a couple more rate hikes may be required to get inflation to the Federal Reserve's target level of 2% because it had not yet done so and because inflation was not declining at the predicted rate. J.P. Morgan experts stated on Friday that the chance of a recession was now minimal due to the increase in economic activity. The pace of growth suggested that the U.S. economy may expand by 2.5% instead of the 0.5% predicted previously. The worry of a recession in the near future may not be warranted, Bank of America stated earlier in the week. On Saturday, Berkshire Hathaway announced its highest-ever quarterly earnings of $36 billion. The second quarter profit increased by 38% and income from investment increased sixfold, thanks to rising interest rates and improved performance at Geico Auto Insurance. However, rising rates have made it more expensive to purchase and upgrade homes, consequently harming Berkshire's Clayton Homes and construction goods companies. Purchasing RVs for its Forest River unit, which produces recreational vehicles, saw a 34% decline in total revenue. The BNSF Railroad, one of Berkshire's biggest companies, saw a 24% fall in profit due to lower shipments of consumer products, price competition from truckers, and greater employee pay. You are listening to the SB News Podcast. Please subscribe, like and download our podcast, it helps us bring more contents like this to you. Fundamental analysis of economy for Forex, future and stock market.